Okay, good evening, good afternoon to everyone. Thank you for joining this call. I'm excited because this is the second takeover of Thursday trading session for, drumroll please, the PIPATHON. So I'm excited because we are that step closer to the PIPATHON. Now, as a reminder, for some of you who are on this call and don't know what the PIPATHON is a 90-day trading bootcamp, which we are starting next week. Yes, you heard me right. We are starting this bootcamp next week. So this week has been our pre-week, preparation week. You know, getting our mindset right, getting ourselves ready for the week ahead. So, as a reminder, before we go into the session today, of the key tasks to complete. And I know there's been questions about how to submit your evidence. Well, I found a cool and easy way to do it, which I will be sharing in the PIPATHON group. I'll put it into the, I'll add it to the message that's, what's the word, pinned to the top of the bar of the group chat, so that everyone understands what you're going to do. Essentially, we're going to be using Google Classes, where you are going to submit your tasks. So I will be able to see who has submitted on time and who hasn't. Yes, yes, we're being serious about this. So the deadline, I'm even going to be nice. The deadline, I'm extending until Sunday at 10 p.m. UK, 5 p.m. EST time, okay? And I'll put all this information in the PIPATHON group. So this is only applicable to those in the PIPATHON group. As a recap, a run through of what the tasks are required, you need to watch and make notes for the basics masterclass and the Forex basics on WOW. Now, I don't want you to send me all your notes. You can just send me a screenshot of your WOW screen that showcases that all of your videos have been watched. It is on you. If you don't understand it, that's on you. You are only playing yourself. You're not playing me. So it's on you and it's for your benefit to watch these videos. But as a way in which you can submit it, you just need to send a screenshot. I don't need to see notes on every single thing from the videos. But I do want to see notes from the Tuesday session, sorry, that we had, walking through the DAX strategy, and also the fundamentals. And I do want to see notes from today's session, because today's session, we're going to be talking about risk management, and we're going to be walking through the strategy that the king himself trades on GJ. Okay, so I hope that all makes sense. If there is any questions, feel free to, yes, fantastic. That's exactly what it is, Rochelle. So 20 videos, watch them on WOW, send me a screenshot. I will show you where to send a screenshot. I'll put all the information and the link to where to submit your screenshots, etc. on the group chat. So don't worry about that. Okay, let's get into it. So today we're going to talk about risk management. So what is risk management? And I'm going to do, I always do this session first. So some of you may have seen this slide before. So, you know, you should know it by now, but I'm going to ask you, everyone in this group, what we believe risk management is. And I'm going to give you a few different scenarios and you can tell me whether it's risk management or not. Okay. So risk management is all about managing your potential losses. So the first phrase is this: determine how much you can stomach in a single trade. If you believe this is a type of risk managing, can I please get some number 3s in the group chat? If it's not, can I put some number 1s? Okay, so if you believe it's risk management, it's 3s. If you do not believe this is a type of risk management, can I please put some number 1s? Fantastic. It is indeed not risk management. Okay, risk management is not about closing your eyes and wishing for the best and seeing how much you can stomach in a single trade. You will blow your account in that manner. Okay, let's do another one. Risking only up to 2% of your account at any time. Again, 3, it is risk management. 1, it isn't risk management. It is risk management. Okay, wonderful, wonderful, fantastic. Yes, this is a type of risk management. All right, how about calculating drawdowns per total account? Is this risk management? 3 for risk management, 1 for not risk management. Cool. Guys, you guys are getting this. Cool. So 3 is risk management. It is risk management. Okay, one more. Calculating drawdowns per trade. Is this risk management or is this not risk management? 3 for risk management, 1 for not risk management. 3 for risk management, 1 for not risk management. This is in fact not risk management. Now, this was probably a bit of a test because I used the word drawdowns and I didn't talk about the percentage of your overall account. But so it was a little bit of a test. Drawdowns is just essentially losses. It's just a fancy word for losses. Essentially, you are calculating the percent. So where you are risking only 2% of your account, up to 2% of your account at each time, that's equivalent to you calculating how much you're willing to lose on your total account at each time. Not per the trade, but per your total account at one point each time. That makes sense. So say for example, you have $100, right? And you're only going to risk 2%, so that's $20. Sorry, $2 every time. $2 every time, right? That's not. So yeah, that is per trade, but you're calculating it per the overall size of the account, not per the overall size of the trade. Does that make sense? That makes sense, please let me know. Okay, I'll recap again. So how you calculate your 2%. So you see the bottom left corner, it says risking only 2% of your account at any one time, all right? So imagine your account is $100. So that means you're only gonna risk $2 at any time that you're trading on your account. So you're calculating your risk percentage based on your overall size of your account, the $100. You're not calculating that percentage based on the size of one trade. All right, so you're not saying, all right, cool, for this one trade, it's $2, and I'm gonna risk 2% of $2. You're saying, for the overall trade, for my overall account, I'm risking 2% on one trade. Hopefully that makes sense. Because if you do it on an individual basis and you're kind of just testing your luck, like, oh, let me see how it goes. When you do that, you are essentially gambling. That is what we call gambling. When you are not applying risk management, you are essentially gambling, okay? So when we talk about risk management, in essence, this is all about managing your potential losses. So if you can manage your losses, you can open yourself to make more money. Because the reality is this, right? Most traders can have a winning streak and you can make money. And it will be sweet. Everybody will be putting blues, jubilating, having the time of their life. And then one trade will come and then you will hear everyone go quiet. And the reason why they've gone quiet is because they've probably blown their account or probably lost more than they planned to lose. Why? Because they were on this winning streak and they weren't looking at risk management. Risk management just went out of the window, boom. And it only takes one bad trade without risk management. And I spelled risk management wrong on here, sorry. But it only takes one bad trade without risk management for you to blow your account. Just one trade. and it's done. All of that winning streak, game over, done. I have felt it, I've experienced it. If you've experienced it, like, just let me know in the group chat. Like, it is not a nice feeling. In fact, the other day, I'll be really honest with you, I was trading, what was I trading? And I was having some beautiful winning streak. And I think I was trading one currency pair that I had no, it's not well with your soul. I had one currency pair that I had no business trading. I don't even know what it was. It was like NZD or something. I had no business whatsoever trading that, but I did. And because I was on some winning streak, I thought, let me up the ante a little bit. Let me just add one more. Let me add one more zero. Let me just put it in sweet and see what happens. Bruv, yeah, that went against me. That went against me. And I learned my lesson. So do not be like me. Manage your risk, you know. And actually this week, when I've gone back to basics and managing my risk, I've seen myself being much more as an effective trader. Cool. So, like I said, yeah, a trader who has generated substantial profits can lose it all in just one or two bad trades without proper risk management strategy. So what are the ways in which you can manage your risk, right? We talk about it so much, but what does it actually mean? What are the practical things that you could be doing to manage your risk? First of all, you need to understand how much of your account you're going to risk at any one point. So I'm going to go through these in detail. So first of all, plan your trades. There's this saying that says every battle is won before it is fought. Why? Through strategy and planning. Not to say that the fighting doesn't count, but it's, in order for you to be in a winning position, you need to have a plan. You need to plan. Like, some of you are going to the markets, eyes closed and mouths open, just waiting to eat. But you can't even see. You haven't planned before you go into the market. And this is not a winning strategy. I'm telling you now, this is not a winning strategy, right? You have to, I highly encourage you to have a plan. And when I say plan, it's all about having a trading strategy. So for example, with this PIPATHON run that we're going to be doing, we are only trading two currency pairs, or two pairs. We're trading DAX and GJ, hence why we have showcased the strategy that we're going to be using to trade DAX, and we're going to be showing you the strategy of how we're going to be trading GJ. That way you are prepared and you are planning for your trades, you know, so you know you're only going to go in for a buy when you see a potential pattern on DAX or a potential strategy in GJ, GBPJPY, right? You know you're only going to go in when you see your confirmation. So that way you're only trading when necessary, okay? And then you're gonna know GBP. Oh, sorry. So the currency pairs that we're gonna be going through is GBPJPY and DAX 13, okay? For the PIPATHON. This is only exclusive for the PIPATHON, guys. But what we're talking about in terms of risk management is every trader needs to know this. This is not just exclusive learning for PIPATHON. Okay, so yeah, plan your trades. So you know when you're going to trade. You know when you're going to come out of a trade. You know how much potential pips you're looking to get, right? And that leads me to my next point. Using stop losses and TPs. Stop losses and TPs are your friends. They should be your best mates. You guys should be holding hands when you're going into trades. Why? Because one, it gives you discipline, so you're not over trading. But two, it showcases you're managing your risk. You are managing your risk. What do I mean by this? So I'm someone, when I trade DAX personally, the reason why I don't like to set a stop loss straight away is because of the nature of DAX. DAX likes to do a massive retracement before moving in the direction that I want it to go. And so I know that drawback can be between 50, 60 pips. But I'm not going to ask, my account size might be different to somebody else's account size, and I can handle that risk in my account. I'm not going to tell somebody who can't handle that risk to do the same thing. But knowing what your stop loss should be for every trade, I always trade on a 1 to 3 basis. 1 to 3 basis, meaning I will, exactly, Diane, meaning I will risk 1 pip to make 3 pips. So my stop loss will be equivalent to that. So say if my stop loss is 10 pips minus 10 pips, that means my first TP is going to be 30 pips. And you will see that in the signals that we send out, we tend to do 1 to 3, 1 to 3, right? So stop losses have a ratio for your wins to loss, ratio for your stop loss. Then when it comes to TPs, now I set my TPs as per the strategy. So if you recap on the Tuesday on a DAX strategy that I sent across, I would have shown you where exactly I like to take my TPs, all right? But I have an idea of where I want to get my TPs. That's why I have TP1, TP2. I have my stages where I want to hit my TPs. That way, once my TP is hit, I'm good. I'm happy. I don't need to look at the charts anymore. You know? Exactly. The wicks can become very long. But if you use the stop loss and TPs accordingly, I'm telling you, you save your account. There has been times where I've put in a trade, put in a stop loss, left my trade window, gone away to do my business. I've come back and the trade has gone complete pants. It's just gone the opposite way. But because I put my stop loss in, because I was using a good lot size, it was a minor in terms of the loss. But there was one time, I will never forget this day. There was one time, it was a Tuesday. I'm telling you my war stories with risk management so that you will not come and follow me. There was one time on a Tuesday, I went into one trade and it was a beautiful trade. But then Trump went to go and say something and the markets just reacted instantly. When I say instant, it was just one big old wick, big old candle, pew, down. And I did not have a stop loss. That day I cried because I lost a lot of money. But it was stupid because it was an oversight. I should have put a stop loss in. And I always usually do, so I don't know why. But another element of stop loss I want to talk about is trailing your stop loss in profit. Using your stop loss as a way to secure the bag. You would hear me often say this. Securing the bag. Securing the bag. Okay. Let me go into the charts and show you what I mean by securing the bag with a stop loss. All right, so let me share my screen. All right, so here's a chart. Okay. Now, imagine you went in on the blue line, right? And you're going in for a buy, and it all bought. If you now move your stop loss, let me just move. If you now moved your stop loss here, all right? All right, that's your stop loss. You've now moved your stop loss here, and your entry was here. Okay, here's your entry, and you're going in for a buy. Entry for entry for buy is here, and then it's bought, it's gone up, and you move your stop loss into profit here. The difference between where your stop loss currently is and your entry is profit. This is profit, meaning that you have secured this profit. All right, so you've secured this profit. This is profit. You've secured it. All right. So as price continues to go further and further into profit, you move your stop loss further and further into profit. Okay, I'm going to try and go through this again. So imagine you entered here on a buy. And in this example, you can see that price has gone up, it's gone up, it's gone up, right? That's price. Price has gone up. Okay. Now that price is now, what's this? 40 pips in profit. You want to put your stop loss here. And I'm going to explain how you set your stop loss in a minute, all right? But I just want you to get the concept of putting your stop loss in profit. So you put your stop loss in plus 10 pips, all right? Let's just say you put in plus 10 pips. So your entry is here. You go into your trade, you hit modify trade, and then you change your stop loss on this buy. Okay, you change your stop loss to a price that's in profit, so above your entry. Okay, so that means that if price retraces and hits your stop loss, it's fine, because guess what? You've got this as profit, so you secured your profit. You're good. You'll be crying if price hit your stop loss and your stop loss was still here at minus something. You'll be crying. All right. So that's your stop loss. Now, someone asked the question how to do this with a sell. Let me show you. Now, imagine you went in for a sell right here. Okay. You went in for a sell right here. And look at that beautiful sell. It's a wonderful sell. This is like what? Over 200 pips drop, right? Now imagine at this point here, because with a sell, you want price to fall, okay? So if price has fallen, it's fallen and it's falling, and you now amend your stop loss to 50 pips in profit, okay? How? By placing your stop loss lower than your entry price. So for a sell, you want to place your stop loss lower than your entry price. For a buy, you want to place your stop loss above entry price. Why? Because on a sell, you are expecting price to do what? Fall. On a buy, you're expecting price to do what? Rise. Remember the very basics of trading. You want to buy low because you want price to rise, and you want to sell high because you want price to fall. Right? Those are your key high-level principles of trading. Okay, so imagine it's your sell entry. Now your stop loss, you put your stop loss here in profit. You secured money. So in case price decides to do this and come back, it's cool because you've got your stop loss in profit and therefore you have secured the bag. Okay, I'm gonna go through it one more time. Okay, so the basic principles of trading are buy low, expect price to rise, sell high, expect to fall. Okay. All right. So basic principles of trading: to buy low, sell high. Now, if you expect price to on a sell, you've bought at this highest point here. all right, on the sell entry, because you think price is going to fall. Now, if price falls, fantastic, you're in profit. Now, to secure some of your profit, that means you have to place your stop loss in profit. How do you do that? By placing stop loss below your entry price, where you entered the market. That's how you secure profit on a sale, by placing stop loss below your entry price. Okay, so let's try. We'll try and make it. We'll try and make it 10 p.m. exact. Cool. So it will fall below. Yeah, sorry, you want to place your stop loss below. Okay. So that is the key to putting your stop loss in profit. All right. Now, there are other principles that I go by when I put my stop loss in profit. I always wait for a retracement before putting my stop loss in profit, because what price tends to do, and I'll try and do this real quick, but what price likes to do is that if it's going in an upwards direction, it wouldn't just go up. It wouldn't just usually go up linear like that. It will first do this. Right? Price will go up like that. So it means that every time it's done a bit of a retracement, I will place my stop loss here. And every time it does another test of retracement, I will place my stop loss here. And I'll just keep moving my stop loss up on a buy. All right. So that is how I trial my stop loss. Okay. Cool. Now let me go back to the screen. This was not supposed to be a lesson on stop loss, but it's a good way to manage your risk. Now, the final way, or one of the final ways to manage your risk, is through the 1% rule. What does that mean? So the 1% rule is this: you risk up to 1% of your account at any time on one trade. So if I've got £100, I'm only gonna risk £1 on any trade. I would say the 1% rule, you know, depending on your account size, you can also go up to 2%. But I would say just be smart. Like, do not risk more than 1 to 2% of your account at any one time on any one trade. Okay. Cool. So I'm going to show you an example of risk management. So imagine you have an account with £1,000, sorry, and you risked. Sorry. Oh, how do I go back? You can see it now. Anyways, all right. So yeah, imagine you have on your account, and you risk 2% on each trade, right? So imagine each time you've lost 2% every single time on 10 trades. Yeah, by the 10th trade, you've still got 834 left in your account, right? You've still got 834 left in your account. Now imagine if you was risking 10%. By the 10th trade, you've only got £387 left in your account. See the difference between risking 2% each time versus risking 10% of your account? You know, after 10 trades, you can see the massive difference. You still got 800 left in your account if you was managing your risk accordingly. If you wasn't, you've got 300. That's why it's so important to manage your risk effectively. So now, you know, I'm going to hand it over. So before I hand it over, I'm going to show you the lot size calculator on Shift. Many of you may have seen this before. Some of you may not. Maybe if you've used it, maybe you haven't. But it's a really useful tool to use. Now, a lot of this that we're talking about in terms of risk management, is all about using, it's all about using mindset, trader psychology, you know, like Bumi said, the difference is discipline and greed. You know, the fact is, trading is 90% mindset, 10% skill. That mindset is all about discipline and managing your emotions when you go into a trade. You know, it's so easy to get overexcited. It's so easy to panic trade. It's so easy to try and be fear of missing out and try and go all in for a pie. But you have to be able to manage your emotions. There's a really good book called Trading in a Zone that I recommend that people should read whenever they've got the time to. It's a really good book. It talks about the whole emotion management, right? But these are practical ways in which you can manage your risk effectively. So I'm going to quickly show you the lot size calculator, and then I'm going to hand it over to the king himself, Cliff, to go over the strategy for GJ. You can get the book on Audible. That's where I got it from. Cool. So let me just quickly show you on my phone how to use the cool. So on Shift, every single trade that comes with on Shift always comes with a little calculator icon. Who's noticed that? Who actually uses the calculator? If you use it, put some number ones in the group chat, right? Now, what this says is that you can say your account size is $200, okay? And you want to risk 2% of your account. It will tell you right here what your lot size should be. So this is 0.15. That should be your lot size, okay? That tells you what your lot size should be for that trade. It tells you how much you're risking. Okay, it tells you how much you're risking. So $4, that's 2% of this trade. So this is an easy way to calculate your risk on any one trade. So anytime you're taking a shift trade and you want to calculate your risk, just put in your account balance quickly, boom, 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 and it will tell you what lot size and the amount you're going to be risking for that trade. Really, really easy way to manage that. So this is 0.015. Yes, yeah, exactly, 0.01. All right. Fantastic. So all you need to know is the amount you're risking and the standard lot size. Okay, cool. So now, guys, I'm going to hand it over to the king himself, the one and only Mr. Cliff, the king of everything Forex. Of everything Forex. Where you at, Cliff? There you are. Let me make you co-host.
All right. Hey guys, come on, put some number ones in the chat box for MissJ. Honestly speaking, she literally just made a whole risk management process very easy. I mean, because we can learn every single thing that we are learning right now. Without risk management, it's just a waste of time. So all being said, guys, I'm just really gonna break things down very simple. This strategy on GJ, the reason why we are looking at GJ is because, you know, we are going to be trading that in the PIPATHON group. As we said, we are limiting the number of pairs that we are going to be trading in is DAX and GBPJPY. Now, why did we choose GBPJPY? Very simple, is because, you know, GJ is one of the pairs that gives money just like, you know, just like gold, but it's a Forex pair. Now, I hope you can see my screen. Yeah, perfect. All right, so guys, I've cleared every single thing. I know some of you have never seen this screen like this before, but I cleared everything to make it more very simple. If you know me, how I analyze the chart is very simple, guys. If you know how to use TradingView or Oracle, because it's the same thing, all right? The only difference between TradingView and Oracle is more advanced. It's more, you know, the technology in there is powerful. It's designed to make you more money inclusive, also make things more easier for you in your analysis. But both ways, you have to be able to know how to use a platform that you can analyze the chart yourself. Some people use MT4. So if you know how to use, there is a whole lot of funny stuff in the chat box right now. Who's that? Crazy. Okay, perfect. Ms. Jenna, who is that? The name is?
I have no idea.
The chat boys are making noise, and so I think it's a spammer, y'all. Like,
oh look, we have a spammer. We must be doing something right if we've got a spammer.
I know, right? Like, what does spammer doing? Like, that's so crazy.
All right, I'm gonna remove them. Bye bye, spammer. Thank you for your time and tuning in. I hope you learned something today. Oh look, I think they've gone. Oh no, they're there.
No, yesterday. Well, guys, it means we must be doing something right. People are just, he's just there. He said, I'm here. Are you guys sure?
No, I've taken them out.
All right, guys, so sorry for the inconvenience. This is crazy. I mean, people are nervous about what we're about to do right now. The PIPATHON bootcamp. Y'all can see that? All right. So, let's get it right to it. So this is GJ, and then this is very simple. You know, I'm just gonna break it down a little bit. Now I pull out the line charts for a reason. Now, when you get into the whole trading system, let's just say the financial market, you will normally hear candlesticks a lot. Okay, you will normally hear candlesticks every single time. Now, my mentor, the reason why I'm where I am right now, he said one thing. He said, let's say Africans, or my African people, we don't like stuff complicated. Naturally, people don't like complicated stuff. So, you will hear a lot of people saying so many things in the forex market. Especially I like the way MissJ teaches when it comes to the whole W and stuff. It's very simple. Forex is very simple. It's what happened previously, and you are using the previous event to predict what will happen now, tomorrow, the next 4 hours, the next week, or the next day. That is all what Forex is all about. So Forex is the market, trading is the skill, okay? So if you know the skill, you can be able to, exactly. Very simple, don't worry, guys. Forex is very simple. So at the end of the day, this is a line chart, okay? Now, if you don't know how to draw support and resistance, I always say this, so that when you are teaching somebody, this is how I started. Guys, this is how I started. Actually, line chart actually makes things simple, guys. If you can see a W very clearly, put some number ones in the chat box. I think always MissJ is always saying, just put number ones in the chat box. Exactly. It's very, very that simple, So let me just break something a little bit. You see these edges, I'm kind of try to use this whole thing to make it more simple. Okay. This sharp edges point. Okay, this part is a sharp edge. Okay, I think MissJ, you are not muted.
Oh, sorry.
No problem. Okay, so at the end of the day, this side also, I just want to show you guys something real quick. So this is me. I always try to make things very simple, all right? It's not complicated. These edges. So if you can see the same edges at a lot of places, put some number ones in the chat box. Because if I say I'm drawing all these circles around there, we are not going to finish today. Okay, perfect. So if you have somebody new in your organization, okay, or even you yourself, if you are new and you want to learn how to draw support and resistance, very simple, because trading is all about support and resistance. All you have to do is to choose your horizontal line, place it at the edge, okay, choose another one, and then place it at the edge. Now, when you go onto the WOW platform, Christoph teaches about zone-to-zone trading, guys, because it is always about zone-to-zone. Let me just make this more clearly. Let's just say I am the price. I am in the elevator, okay? And then MissJ wants to, follow me. MissJ don't go to second floor before the price comes there. Like I always say this, you don't make the move before the price decides to move. The price decides to move before you make the move. So that when we talk about zone to zone, this is what it means naturally. Zone to zone, I really like using scenarios to break things down for people to really get it very simple. It's very simple. I really want you to clear all the things that you heard about Forex. Of course, you can lose money, right? Every business, you can lose money. So at the end of the day, I want you to clear that for a second. Understand this, that it is a zone to zone. So how easy it is, like scenario, it's like this. Let's say you have a 12-story building, okay? A 12-story building. And then from first floor to the 12th floor, okay? That is where that is the goal of the elevator in the building, is to move from floor to floor, okay? So at the end of the day, the whole story building is 12-story building. Now, how then do we do that? Kindly just look on the screen right now. I'm gonna be putting lines. Don't worry about where it is. We're gonna be putting lines, okay? So here, I'm gonna be putting lines on the edges. So if you get it, you will just get it. If you don't, no problem. Let's just keep on putting lines. Let's build our building, our story building, to make this more very simple. Yeah, so now how many story building do we have now? Let's say we have 1, 2, 3, 4, 5, 6. Okay, let's just say we have 6 story buildings. Let me just put one at the top there to make it this. So these are lines. They are just lines, okay? Now, let's just say, I'm using an iPad, so let me take a screenshot and just make it more simple. So let's just say we are here. This is the first floor, okay? Second floor, third, fourth, let's say fifth, sixth, and then seventh, okay? So the elevator just move up and down this way, okay? Now, let's just say I get into the elevator, and then I want to move from the first floor to the second floor. Now, what happened is that I am the one moving. I am the price. I'm the one moving. I can move from first floor to second floor to third floor, right? But if I want to go back to first floor, maybe because I forgot something or somebody pressed the elevator, something impacted or something influenced that movement, I have to go back to the first floor. Guys, I will not jump from third floor straight up to first floor. The elevator doesn't do that. It goes back to second and then to first. And then from first, back again to second, and then to third, fourth, fifth, sixth. If in case something happens and somebody presses it and it has to go back to third, it goes back to fourth and then to third. That is the movement of the market. So at the end of the day, if the market decides to go from first floor to the last floor, yeah, let's just say this is the last floor. Okay, let's just say, let me add one more line over here to make this the last floor, okay? When the market moves from here to here, if nothing pushes the market upwards, it will start coming down this way. Just like this, it moved from here to here, and it moved from here to here. The only difference between why people, even though people know this and they lose, is impatience. Because no matter what happens, the market will always do the same thing. I'm going to show you guys something to prove something to you today. Very simple. Guys, if you're getting this scenario, put some number ones in the chat box. It's very, very that simple. It will not ever jump from fifth floor to first floor. So you'll be like, oh my God, I got confused. No, it doesn't work like that. It will come from fifth floor back to fourth, and then third, and then second and first. Okay. So what you are doing is you are tracking. Now, guys, as you see this, I told you this. If you are starting to learn how to trade and you don't know how to draw support and resistance, just let people laugh at you. When I started, I did the same thing. Let people make fun of you. They're like, oh my God, you have so many lines, especially when you find cocky traders. They talk like, oh, why are you doing this? You don't have to, just don't listen. Just do. It's like when you are learning how to write, all right? You write so clean. You just write so slow. And people who are not professional in writing are like, why are you so slow? Don't mind them. Just keep your work clean, okay? So draw lines on these edges. Now, when you change, let me show you something real quick. When you change this to candlesticks, you will get a support and resistance. Now, as time goes on, you will start to be able to, adjust them simple by simple. And then before you can realize you have drawn a zone to zone. You've drawn a zone to zone. Now I'm going to show you guys something really, very simple. This is all that I did when in the beginning, when I didn't know how to draw. People are always asking, how then do I draw proper, support and resistance? All you have to do is to change your candles to lines. Candlesticks came in when people wanted to read it. So actually you can read candlesticks. That is why it's important. So candlesticks is a sort of strategy people use to trade. So it has names. It's just like when you come to Ukraine, and then if you want to speak the language, maybe you come from the States, you don't know how to speak Russian or Ukrainian, and then you want to call a taxi, and then maybe you call the taxi and the driver is like, no, maybe we didn't find you a driver. It's because you don't understand the language. You probably might be waiting, thinking that you got the cab, but maybe you didn't. So it's language. Forex has one. That is why they brought in the whole candlestick stuff. So at the end of the day, all you are doing is you're drawing your lines to understand where the market is and wants to go and then shouldn't go. When you're making analysis, it's not always about where you think the market should go. It's always where you think it shouldn't go. All right. And when you are predicting where the market should go, it's not like it will go, it should go, and it shouldn't go. So as MissJ was explaining, it is very, very simple when it comes to applying, your stop loss as well. So now you've drawn your lines, right? Very simple. This is on a daily. Now, time frame is also very important. Now, when it comes to GJ, there is something particular about it I want you guys to understand. It can move 100 pips up and down in the same day. It can move 100 pips up and 100 pips down in the same day. If you were trading GJ today and you saw exactly kind of the same move today going up and down kind of the same way, put the number ones in the chat box. It happened, all right? But one thing beautiful is that I'm so glad about Forex is Forex does not really try to, make you lose your money. If you are patient, and then if you are patient enough and if you apply the strategy that made you money, I always tell people this: when you make money in the market, write it down. If you don't make money, the reason why you didn't make money, write it down. When you make the money, the reason that made you the money, repeat it over and over and over and over again. All right? And then the reason why you lost money, don't do it again. It's very, very, very simple. The question is why people still make those mistakes. All right? But at the end of the day, you make money from a strategy, write it down. If you don't make money from a particular strategy or you did something wrong, you write it down and just don't do it again. It's that simple. So today, there was something that happened. I'm going to prove this to you guys right now real quick. But before that, I just want to see if you get a whole concept of how to draw support and resistance. Now, how then do you apply this as analysis? I'm going to show you a very simple thing that it always happens. Okay, so let's just say right now, if I am drawing my support and resistance, I don't really draw it on all the lines. Why? Because I'm just trying to catch a particular move. Okay, so I'm going to clean this. Just wanted to show you. So I'm going to clean this. And I'm going to clean this. This applies to every single thing. I'm going to clean this and I'm going to clean this. All I'm going to do is, where is the consolidation area right now? Consolidation area is an area where the market is not really moving. It's just bouncing up and down. So on the daily, that is where it is. So we're going to maintain the daily lines as pink. I really don't see colors, but I see this color, right? Guys, is it pink or purple? I don't even know. So I'm going to change. We're going to go to the 4 hours, and then we're going to put another lines here. We're going to put this one here real quick on this part because I see some edges right here, okay? And then I'm gonna change this color right here. That is what I used to also do, so you can do the same. Back then, I changed the color so that I would know, okay, this color is for the 4H, this color is for the 1D, and that color is for the 1H, okay? So we're gonna put up another color for the 4H. Let me put it here. Okay. Let me put it here. Now we're gonna go on the 1H, and then we're gonna do for another edges. Now on the 1H, you see there is an edge. That is the daily one is not touching, which is here. Or maybe let's put it here. Okay. And change this color to, let's say, red. Yeah. Perfect. Now, what does this mean? It means now we have built zones, areas where the market could reject and all that. Now, when you change this to candlesticks, because that's what people are usually they know. So let's change it to candlesticks. Now, this is a move. The truth is, just like how when you go to the Oracle, there is, cloud and every single thing, the same as I told you guys. The reason why Oracle is very powerful is that you will not get the indicators that enter now. Oracle gives you that. So at the end of the day, even when you're making analysis, you have another confirmation. So it's very, very important that, you get to be able to understand it as well. Now, there is something in Forex that I've always understood, that what happens at the left side always happens at the right side, meaning history always repeats itself. Now, I'm going to quickly just do something right here real quick and show you guys something. Pay attention, because I really hope that you get it. Today, keep an eye at this area, okay? And keep an eye at this area, okay? Now, today, there was this trade of GJ that was a buy. So if you are in the intermediate group or in the Cairo signal group, you could tell that you already got TP1 and 2. Now this came here, right? So people were in this trade. Guys, if you were in this trade for a buy for GJ today, put some number ones in the chat box. I just really want to let you, okay, so you were in this trade for GJ. Now, when you were in this trade, it came down, right? Real quick. Can you guys see this drop right here? It just came down real quick. Now, this move, this drop made people went in for a sell. I don't know if anybody did that on this call, but did anybody go in for a sell when they saw this drop coming down right here? Did anybody do that? Good, good, I'm glad. Now, at the end of the day, there was one thing that I knew that it was true. No, it kicked me out. No, perfect. So at the end of the day, this right here, the same thing happened here. The only difference is, it always scared people. Do you guys see the same thing happening? It was going up, it came down, right? And then it went back up. So when I was just looking at this, I was like, uh-oh, somebody somewhere who is not patient is going to miss this trick. It always repeats itself. So all you are doing is, as long as you have your support line, until it breaks and closes outside the support line, do not panic. See, trading is very, very simple. It's very, very simple. If this looks a little bit gibberish for you, do not worry. But GJ is very, very simple. It repeats itself. Look, just right here, the same thing. And the same thing happened. And then when it happened that way, it went back to the same area here. So now, do you know what is about to happen? If this line right here doesn't get broken, it could come back down here again. Honestly speaking, guys, like when you get to understand the scenario, everything is just perfect. It's like, oh, it's like, how if you have a sibling, I have one and they are funny. Sometimes they could come and be like, oh, the food, are you going to eat? Simple, like, hey, can I take your food, bro? But the food, are you going to eat? So what are you going to say? You want to eat the food? You're going to ask the question like, yeah, I mean, if you are going to eat, I want to eat. But, they just want to eat, but they don't want to tell you that I want to eat. So the same thing with Forex. When Forex become like a friend. So I always advise people. So they get you kicked out. Now I will explain that. Okay, today we are really going to explain something. How many minutes left? Just give me like 10 minutes max, and then I will just conclude this call. I don't really want to waste anybody's time. But it's very, very that simple. We'll talk about stuff. I'm really going to make it very simple, as MissJ said, and then you guys will see everything aligns together the same way. So look at it from this way. Now this came here, it came down here, and it went back here. Now it's rejecting on this line. No, it's rejecting. So all you are waiting for now, don't make the move before the movement happens. Let the movement happen. So I always tell people, this is the calculation of Forex waiting for the move. Let's just say the whole, and if you don't use, guys, let me give you one more something real quick so that everything just makes sense. So that you always know that you have confirmations. All right, don't worry. Hold on for a second. Let's see how it goes. Whereas I know I'm not sharing my screen. Don't worry. I just want to pull up another screen real quick. Okay, so now this is it. Sometimes people ask how many pips. Every single information is out there. So sometimes when MissJ says, "Hey guys, use my FS book," she knows what she's saying. Look at this right here real quick. When you use my FS book, And then when you come to the volatility tab, you get to know how many pips a currency pair is moving in a minute, in 5 minutes, in 15 minutes, in 30 minutes, in 1 hour, in 4 hours. Gold is moving right now in a minute, 82 pips in a minute, meaning up and down, the volatility level is like 82 pips. In 5 minutes, it's moving 258 pips. So if you are trading, let's say a particular pair, don't just, stay in and say, I want this pips because you want it. If your analysis came from the 1 minute, understands how many pips that, you could go for, that could probably go in your favor. So all these things, the information is out there. You go to the volatility tab, you search for GJ. GJ is currently now moving 1.4, like 1 pip per minute. So, that means the volatility level is not very low. So let's say in daily, GJ moves like 115 pips, right? Let's go and check if that is true. See, yes, right here. You get to right here, and then we calculated the number of pips. So from here, you see that, guys, a whole long move, but today the volatility level wasn't really high. So it was just 100 pips move. It's good pips, but it was 100 pips. If this was gold, we would have been seeing almost 400 pips by now. So sometimes when you are in a trade, understands how many pips it's even moving and all that. So as you can see from my tab right here, I have all these things aligned together. I first of all come to my Forex factory and I check the news. This is something you need to apply every single day. I come to the currency strength index to check the strength of the pair. All right, and I will see, okay, GJ is weak, GP is weak, JPY is strong, and then I know, okay, so that means this could take this down. It's very that simple. And I come to my Forex volatility and ask myself, how many pips should I be targeting? So now when you come back to your charts, one thing you have to understand is a whole move. Let's just say, before I explain this, let me show you guys something real quick for you to understand something. When you talk about break and retest, that is all that I do. The break and retest, write this down. Consolidation, support and resistance. Just write this down. Consolidation, support, consolidation plus support and resistance plus break and retest equal to confirmation. I mean, this is not out there. I'm just creating this right now. I hope it makes sense. If it makes sense, put the number ones in the chat box, but it will make sense. All right. Consolidation plus support and resistance plus a breakout equal to confirmation. Very, very simple. I really hope this really makes sense to you, everybody today. Consolidation is every single thing that, it's like the price is moving, not moving, it's moving, not moving. So some of the consolidation areas I really want to, let me zoom in so that we can get some of the, okay, so these are some of the confirmation areas. Okay, like this one right here. Now this is on the 1H. Every single move that we are trying to do over here, we can get the same thing in all the time frames. You will see the same things. You will see the same things. The same things, guys. You will see the same things. So that is a consolidation area. Also, this one is a consolidation area. Here is also a consolidation area for the type of move that I want. Here and then here. Here. Okay. So what are we looking for? Now, I'm glad that I found this area. Now, guys, we're almost going to finish soon, so pay attention. So this strategy is basically for GG, okay? Not just GG, I mean for the whole, any trading skills you want. It's the same. You see, this whole move sometimes. Have you ever asked yourself the question that, then how am I supposed to know because the move, the candlestick is so long, how am I supposed to catch this? Have you guys asked, has anybody on this call asked themselves before that how can I catch this move? You already broke it and it was long, so I had to let it go. Okay, probably you've asked yourself that question before. Perfect. Now let me show you the trick. Every single thing always has an answer in trading. Now when you are on the 1 hour time frame now, so the only way you can catch this move is to step back 2 times of the time frame, 30 minutes and 15 minutes. Let's go see something. The same stuff. I really hope I can put something there so that we can see that area. Hold on. Okay, this is the candlestick, right? So let's see. Let's go to the 30 minutes. Sorry, this is the 1 hour. Let's go to the 30 minutes. Where are you? Uh-oh. Cannot find it. Okay, hold on. Okay, there you are. Okay, I found it. I had to just zoom in. Okay, there it is. Guys, do you see that? Do you see the same candlestick that was long, now it's 2? Do you see it? Like the same candlestick that was 1 on the 1H is now 2 on the 30 minutes. So anytime that you are trying to make your analysis from the 1 hour, go to the 30 minutes and see what it's doing, because before the 1 hour will make a move, the 15 minutes and the 30 minutes has to align together, showing the same direction before the 1 hour will happen. It's very simple. So sometimes the reason why people don't use breakouts and retest because they say, oh, the move went to left, it was a long way. Yeah, just go to the smaller time frames and see what is happening over there too as well. If you are trying to look for your entry from the 4H, check the 1 hour and then the 30 minutes. If you are trying to look for an entry from the 1D, check 4H and 1 hour. Because before the 1D will be able to make a move, then that means, let me show you why I'm saying that. Very simple. Every single thing always have a reason. Okay. So this is technical analysis side for investing.com. So when you come here to the technical, okay, I want to show something that, yeah, perfect. Like the, I want to see some strong buy. Yeah, like this, like the natural gas. Okay. You see on the 5 minutes is a sell, and a strong buy. The reason why it's like that is because on the 5 minutes, 15 minutes, and the hourly, all of them has to align themselves together as one move. And then when they are all looking like a buy, before the daily will make a buy. All right. So before that, on the 5 minutes, 15 minutes, or the hourly, is saying sell. But on the daily, it's saying buy. Why? Because the daily is not ready to buy yet. It's not ready until, so sometimes you can make analysis from the daily and it's not buying because the 4H and the 1H is not ready to buy yet. So the same thing applies to this area. Very, very simple. Now, when you go to the 15 minutes, the same area, oh my days, keeps on going up. The same area. Now, how many candlesticks, guys, do we see? Now, do you see a perfect break and retest? Look at that retest. Very perfect. Look at that. Perfect break and retest. Very perfect. It broke it, retested on the red line, then bam. So the only problem is if you don't check the smaller time frame. So anytime that you want to take your entry from the 1H, move to the 30 minutes and then the 15 minutes, and then you will make your move on the 1H perfectly. If not, because sometimes if the momentum is very strong, it will just spike up on the 1H and you might not see it. It'll be like, oh, I missed it. So the same thing happens. So it's a break and a retest, strategy, break and a retest strategy all the time. It always works. Look at this area right here. It broke, retested, bam. You draw your support here. You put your resistance there. You put your support right here. Some people will draw this based on the 15 minutes. I'm going to put it right here real quick. Okay, right here. It broke. I'm putting it there because of this area right here. Okay, so it broke, retested, and it spiked up. The same thing happens. But with me, if I draw support and resistance, I don't just clean it. I let it be there so that when it's coming back down, I know, look at this area too real quick. Very perfect consolidation area. And then it broke and retested, and then it shot up. Now, at the same time too, talking about stop losses, how I put my stop losses in any trading, GJ, whatever, just like what MissJ said. This is the simple thing that I would just tell every single person, that at the end of the day, you don't put stop loss where you choose. Actually, you put stop loss where you think market shouldn't go. So if you've realized, sometimes some indicators will bring stop loss and it's very huge, like 80 pips, 70 pips, and they're like, why? Because you don't choose stop loss based on how much you want to lose. Honestly speaking, you choose a stop loss based on where price shouldn't go. So you don't want, because I don't really usually use tight stop losses. Sometimes some stop losses may look like, oh man, I know I'm gonna be hit, but I'm gonna just go hit anyways. so that, you know, it will feel like I'm using stop loss. No, that's not how it's supposed to be like. So let's just say if you are trying to enter, just like what Miss Jen said, just like if you're trying to enter a trade, let's say for a buy, you drew your support. Let me just go where I can find another break and retest. Just like here, perfect here, this area right here. You want to go for a buy. Okay, let's put let's put the long, where is it? Long position here. Let's say you took your entry from here, maybe here, okay? So now, the stop loss is right here for a reason. Stop losses are always supposed to be below or above your resistance or support. It's supposed to always be above or below your support or resistance level. So let's just say this right here is where you want to put it. Because sometimes have anybody realized when you are in a trade and you can get kicked out and then the trade goes back to the same time, the same place it went to? Like today's trade of GBPJPY probably did the same thing to some people. So sometimes, yes, you always have to try to make your stop loss a little bit wider, because now there is something something I always say is, you know, now everybody they know people are really getting, you know, their hands on trading. So they're gonna, you know, mess you up a little bit. Now, the reason why you have to be very careful with stop losses and brokers these days is the wicks. Wicks are not supposed to be part of trading stuff. Like wicks are not supposed to be there when it comes to candlesticks. That is the truth. It is there to show us that, you know, there is influence. You know, people are trying to, you know, mess people up. Why? Because naturally, this is how it was supposed to look like, honestly speaking. This is how it's supposed to look like. Take the wick out. This is how naturally candlesticks were supposed to look like. But it was designed now, and wicks were added to it. Because at the end of the day, we want to know what happened. It's like, I was in this trade and I was kicked out. And you started questioning yourself, did I do something wrong? Did I close it? So in order for us to know what these guys are doing, then wicks came in so that we would know, oh, so something happened here, but they wiped it off. So now we know that these are the wicks. So sometimes, mostly when people are drawing their support and resistance, they make sure they bring their wicks. They bring it, you know, below their wicks and above their wicks so that they will be able to catch the move. So guys, all being said, what I'm just trying to say right now before we end this call in the next 3 minutes is, when it comes to GG or any type of mostly Forex pairs, basically it's always about support and resistance. Okay, always about support and resistance. Every single thing that you see over there, the PIPATHON. Before we close this call, I'll pass it over back to MissJ, and she will give every single announcement to you guys, because the PIPATHON bootcamp is really going to be amazing. We have so many things packed for every single person, so it's going to be very, very amazing. So all that I'm just saying is that, guys, look, when it comes to trading, it is very simple. Every single thing you see, in the market concerning indicators whatsoever is always associated with support and resistance. Make that thing very easy in your head and everything will change for you. The market always does the same thing. It's the same thing. Support and resistance strategy is the same. Look, it's the same for gold. It's the same for gold. As you can see, this is a support and resistance move that I drew. So this is for everybody who is actually really, this is a gift for every single person on this call. Actually, you can just take a screenshot for this setup. So this setup actually has been there for a very long time, and it keeps on respecting this. So basically, yeah, it's the same thing for every single. I actually have some stuff drawn for BTC, and it's doing the same thing actually right now. So it was here in the morning, and it just went and bounced back again, playing around the zone. So it's the same thing, you know, for every single pair. The same thing, guys. Support and resistance is the same thing. So one thing that you have to understand is you are trying to make, okay, cool. So this is gold. I did this analysis from the 1H. Okay, so if it breaks this area, it is coming down there and all that. So it has been respecting this area kind of. So this is for gold. And this is for BTC. I'm kind of into Bitcoins right now because I believe that this Bible right here is going to do magic. So it is really, you know, doing this right now. So it's very simple area zone for BTC right now. All right, perfect. So so that is it, guys. I just want you to know that some of these setups, how we're going to be trading GBPJPY, is going to be about support and resistance. It is very, very, very that simple. Support, resistance, support, resistance, support, resistance, support. Every single thing you see is support and resistance. If you don't believe me, take a look at this. Everything you see is support and resistance. Don't let anybody scare you about anything. The moving averages, every single thing you see is support and resistance. The moment you get that, everything changes. Look at this right here. Let's just say I want to take this fib all the way down here to this area, right? All the way down there to this area, right? Let's say right here, where the same support and resistance line is. Now, guys, check this out. Now, if I'm supposed to put the support and resistance lines, okay, I don't even have to do it. Do you guys see it? Like literally just look at that. Look at where the 0.7 line is. Do you see it? And look at where, like, it's literally just support and resistance. Everything is just support and resistance. You hear people talking about Fibonacci retracement and all that. It is all support and resistance. So if you understand the idea of zone to zone movement is the same, because if I start to pull these lines and bring it all here, it is all support and resistance. If I put this here, and if I put another line right here, another line here, where the 1 point whatever is it has drawn a support and resistance between the 0.7 and the 1. So it is, everything is always about support and resistance. So when you understand that in trading, everything changes, and that is the simple stuff. So guys, you go on wow, pay attention to Christoph. You know, his zone to zone trading is very, very powerful. You know, it's very, very, very powerful. You should pay attention to that, and everything will be simple for you in trading. All being said, the bootcamp, people will not come out of this bootcamp the same way again. Like, it's gonna be really, really, really not just intense. It is not designed, as I said, it's not designed to make you fail, but it's designed to make you really understand that Forex is a business, not a lifestyle. So anybody that is supposed to be involved, that keeps on, yeah, Miss Jen is already asking, guys, if you are ready for next week, put some number ones in the chat box, because honestly speaking, we are, you know, y'all don't know what me and Miss Jen has planned. You know, this bootcamp is going to be very powerful. You guys are going to come out and see the chat and like, uh-oh. So this was what I was always looking at, that it was complicated. It's not really complicated, I promise you guys. You after 90 days, you'll be surprised. It is not complicated at all. Forex does the same thing it did last week, last year, yesterday, 4 hours ago. It keeps on doing the same thing over and over again. And when you understand, it's game over. Honestly speaking, game over. The only thing that is going to be remaining is your mindset and then your risk management. Your mindset and your risk management. That is the only thing that probably might not, you know, let you make it. But if your mindset and your risk management is okay, then everything changes. Okay, now, all being said, I think I'm going to pass the call over back to Miss Jen. Guys, you should really pay attention to BTC, y'all. This is just a friendly advice, all right? Anyways, all right, Miss Jen, I just know that it's gonna do some wonders. I don't want people to miss this.
Thank you, King. Back to you. Thank you so much, guys. Put some flames. Thank you so much, King. All right, cool. That was it. I'm not gonna waste any more time. We're gonna send the information in the PIPATHON group chat of how you should submit your evidence, and also the test is going to be released tomorrow to be completed by Saturday. Okay, so this is it, guys. By Sunday evening, by 10 p.m. when you have to complete. So the test is 24 hours, so we'll release the test tomorrow for you to complete by Saturday. But the evidence for all of your watching the videos and all of that needs to be given to us by Sunday at 10 p.m. London time, 5 p.m. EST time. I'm going to be releasing this recording momentarily when it finishes loading. Okay. Anyways, guys, have a fantastic evening and good afternoon to everyone. Speak to you guys soon. Bye-bye.